Good morning. Welcome back to Venture Daily. Elon Musk says that Grok 4 is smarter than PhDs in all disciplines. The Pentagon takes on China in the battle for mining rare earths. And Amazon considers dumping billions of more dollars into Anthropic. I'm Jackson Fordyce. It's Friday, July 11th. Let's get you smarter before your first meeting. I'm realizing now that this gray t-shirt is probably the worst thing to wear with this background. This is gray. This is white. This is gray. This looks awful right now, but it's okay. We have a great show today. We have a packed show. VCs, founders, we're bringing on everybody for Friday's episode here at Venture Daily. But let's hop into today's first story. Late Wednesday night, Elon Musk unveiled Grok 4, the newest version of xAI's flagship model. Musk's AI is racing neck and neck with OpenAI. Musk's xAI is racing head-to-head with OpenAI, Anthropic, and Google's DeepMind. Here's what Musk had to say about that. We have a video, I think, here of Elon talking about how Grok 4 is smarter in basically all disciplines than a PhD.
I mean, at least with respect to academic questions, I want to just emphasize this point. With respect to academic questions, Grok 4 is better than PhD level in every subject, no exceptions. Now, this doesn't mean that at times it may lack common sense, and it has not yet invented new technologies or discovered new physics, but that is just a matter of time.
So what's next for Grok 4? What's next for xAI? Musk laid this out in the live stream on Wednesday night. So July, Grok 4 comes out. In August, a new coding model. September, a multimodal model, and then in October, a video generating model. But for a deeper dive into the story and Grok 4, I spoke with our friend Jimmy Yoon.
Yeah, Jackson, thanks for having me on. My name is Jimmy Yoon. I'm a principal at APC. We're a $6 billion venture capital firm based in San Francisco and Austin.
And for my first question to Jimmy, I asked him, Musk says Grok 4 is smarter than PhDs in all disciplines. Is that just hype, or are we actually seeing a leap in reasoning that puts these models closer to general intelligence?
I do subscribe to this thought of what is AI, and I think it used to be the Turing test, which is the ability to fool humans, and we've already cleared that bar. And there's been tons of literature put out, but objectively, it does seem like we are continuously making leaps. My favorite account to follow on this, if we want to link it afterwards, is Artificial Analysis. They do a great report on every time a model gets released, and xAI plus Grok smoked everybody, and I'm sure that'll have change in the coming weeks to come. I mean, it really is, the four horsemen. It's xAI, OpenAI, Anthropic, and Google at this point.
And we'll get into the four horsemen a little bit later on in this conversation with Jimmy, but I wanted to ask him about pricing. Grok's heavy mode costs $300 a month and uses multiple agents to solve problems. Are we entering an AI era where the best performance becomes a premium product?
This is such an interesting question of what are you willing to pay for it? I think OpenAI and Sam Altman has been on the record of we wanted something that was approachable. We came up with the $20 model, and then others such as Perplexity, and then eventually Grok and others followed. And then after O3, I think that was $200 a month, and now we're starting to see these heavy subscription packages come out. I think the short answer is yes, and you'll probably see more, not less, and more tiers coming out based off usage, and ultimately depending on, is it a lifestyle tool, is it a workplace tool, or whatever it may be. And if that $300 adds a lot of benefit, why wouldn't an enterprise or even an individual pay for it?
And to close it out with Jimmy, I wanted to ask him about the new product launches that we saw in the last image that I showed y'all. I asked him, Musk teased coding, multimodal, and video models dropping monthly. Can xAI realistically keep up this cadence, or is this just a spectacle play to stay in the narrative?
I want to maybe just make a quick comment on where X stands, and we are investors in xAI at APC. I just think the talent pool at the big four that I was mentioning, OpenAI, Anthropic, X, and elements of Google, and certainly now with Meta, are incredibly impressive. And these four firms, like we've shown, raising $5 to $10 billion in private markets is no longer, a colossal undertaking. It is something that's actually quite doable. And I think the part I'm actually most excited about in this race is the application of these LLMs beyond these endpoint solutions like a laptop or a smartphone, which you and I or your listeners may be using, right? I mean, Elon has talked about putting XAI or Grok into Teslas. I think that's a major, major step, right? We always thought that Siri and Apple were going to be the big winners coming out of this. And we haven't really seen that. Like the multimodal applications, I think, are the next interesting frontier. I mean, how much more we can really push it just on the LLM basis. It's cool, and I don't want to understate that, but I think there's a new book to be written.
Thank you to Jimmy for being on the show today. All right, moving into our next story. The Pentagon just became the biggest shareholder in a public company, not Lockheed Martin, not Raytheon, MP Materials, the only rare earth miner operating in the United States. The DoD announced yesterday that it's investing $400 million into MP via preferred stock in a move that will make the company's largest shareholder the DoD, edging out BlackRock and even the MP's CEO, James Litinsky. Now, this investment is a strategic play to secure America's supply chain for critical minerals, the kinds needed to power F-35s, drones, submarines, etc. Basically everything involving next-generation weapons. So MP Materials runs Mountain Pass, which is this, what we're seeing on the image, the screen here, this mine in California, the only operational rare earth mine in the country. And so this is part of a broader public-private partnership to bring rare earth magnet production fully onshore. And this is something we've talked about here at Venture Daily a couple weeks ago, I believe, in regards to our dependence upon China for a lot of these rare earths that power all of these, next generation weapons, these laser systems, etc. So for more on this story, I spoke with someone who's building in this industry, Ted Feldman.
I'm Ted Feldman, founder and CEO of Durin. Here at Durin, we are working on building automated drilling rigs used in mineral exploration, focused on collecting more data than any other rig and pulling rock into the ground without nearly as much labor cost as any of the competition.
So for my first question for Ted, I asked him, with the United States importing 70% of rare earths from China, does this investment signal a serious pivot toward reshoring, or is this just a symbolic stake in one mine?
Yeah, MP Materials is a company, and Mountain Pass is a mine that's close to my heart. I actually worked there for a little while when I was in college on their magnetics team. And so this announcement has been, a long time coming. A lot of work has gone into this. Mountain Pass, MP Materials' flagship rare earths asset, it is the only economic rare earths mine that we know of in the United States. The move today is a very, very important signal. DoD taking a 15% stake in the mine. It's essentially a quasi-state-owned enterprise. We haven't seen anything like it in the U.S. since the Cold War. And so it's showing that, we need the government involved in this to compete with China because they are dumping rare earths on the market. And I mean, it's an open market, anyone can compete, but the Chinese government is heavily subsidizing the mining, refining, and magnet production within China and illegally importing rare earths from Southeast Asia from mines that are environmentally catastrophic for the environment. We have very high environmental regulations here in the U.S., and it's one of the reasons that mining in Mountain Pass is more expensive than mining elsewhere is because we have those standards. And so with the news, there's an investment. There's also a price floor, $110 a kilogram for NdPr. Today's price is around $60. This lets MP Materials compete and invest for the long term.
So yeah, Ted's saying that we need the government involved in this, a 15% stake from the DoD. But I was curious, are we going to see more of these kind of deals, public and private, across other industries? So I asked him this question specifically. If this public-private model works for rare earths, could we see similar equity-driven partnerships in semiconductors, biotech, or other critical sectors?
Yeah, my personal opinion is I don't think the government needs to take a stake. I think the more important part of this announcement is the longer-term financing, loans, and then particularly the offtake and price floor. They just need a buyer. Whether the government owns any part of it, sure, they have say in the business. They can help drive the direction. There's a profit share here. I frankly think it's a little bit un-American to have the government this involved in companies, but it is nationally strategic. And I think the one place that it could be done that I wouldn't be averse to is this here, just due to the criticality and the importance of this asset. Also, Chinese company owns 7-8% of the business. They don't really have a say. Now there's a strong incentive for them to sell. They're never going to have any say in the business. Why are they owning a part of it?
Un-American, but it's still strategic. And so it makes sense that, in this specific case, that the government is really heavily involved in some sort of industry like rare earths because China has such a chokehold almost, I guess you could say, on the United States. And speaking of China, I wanted to ask Ted, as the U.S. cuts China out of its rare earth supply chain, does the Pentagon's deal with MP Materials mark the start of a mineral Cold War And how might Beijing respond?
Yeah, we're certainly seeing supply chain bifurcation, and this is really a response, I think, to the Chinese export bans. Are certainly making it more difficult to export rare earths from China to Western countries, in particular the United States. We'll have the Chinese rare earth supply chain with the U.S. MP Materials is going mine to concentrate, oxide to metal to magnet. And so all the way, it's the one asset that can do it within the U.S. MP Materials is basically going to be the only American magnet producer. The problem here, and I don't know if we'll get to this later, is Mountain Pass doesn't have many heavy rare earths, and heavy rare earths are very critical for these magnets. And so they are going to need to partner with other companies in order to secure those. They have the NdPr, they don't have the dysprosium and terbium. So I think they're starting to look at recycling or potentially importing in order to get those heavies.
So that was supposed to be my last question for Ted, but then I read this article earlier that day, just before our call, about it was an opinion piece, I believe, in the Wall Street Journal about how there are a lot of rare earths in Alaska, but because a lot of that land is federally owned, we cannot mine anywhere in Alaska. So this is a treat for y'all here at Venture Daily. I wanted to ask him about mining in Alaska. So here's what Ted had to say about that.
I think it all comes down to cost. It is Alaska remote. It's going to be expensive. You're going to need to find a massive high-grade deposit in order to justify that. Every mine's somewhere along the cost curve. We want to be as close to the bottom as we can. And sure, federal land would be great if we can slash permitting. I think that could be a great way, particularly if the federal government is involved to accelerate some of these projects. And that's what we've seen through some of Trump's executive orders over the past few months, is accelerating permits for select few dozen projects, cutting all the red tape there. And so I think I'm optimistic about that, but you don't just find a mine. It's today a decade, 15, 20 years of exploration that goes into finding a mine. A lot of that being raising capital, spending it on drilling, pulling up the rock, analyzing it, figuring out what you found, and then kind of incrementally doing more drilling until you've delineated the entire deposit and made the determination that it's economic to build the mine. And so it doesn't happen instantly. It's probably not, I don't think it'd be basically impossible to go from greenfield discovery to mine built in the next 4 years. What we're better off doing is expanding the existing mines in the short term while investing in exploration for the long term. And so Mountain Pass is just about our only bet right now. We should be expanding that mine. It's not going to last forever, so we do need to be looking for where is the next incremental supply going to come from.
Thank you to Ted for being on the show today. Next story, our last story for today, we are focusing on Amazon and Anthropic's potential multi-billion-dollar deal again. Sources say Amazon is weighing another multi-billion-dollar investment in Anthropic, a move that would deepen what's already one of the most important alliances in artificial intelligence. So Amazon's already poured $8 billion into Anthropic, and this next round would push its total exposure even further. A clear shot at Google and Microsoft, who are backing rival models in the AI arms race. But for more on the story, I spoke with our friend Nnamdi Okike.
I'm co-founder and managing partner of 645 Ventures. We're an early stage venture fund. We invest at seed and Series A. We're headquartered in New York. We have a San Francisco office as well. And we started the firm about 11 years ago.
And so for my first question with Nnamdi, I asked him, with Amazon looking to extend its $8 billion bet on Anthropic, is the real AI race no longer about model performance, but about who controls the infrastructure and the distribution?
And so it is an arms race in terms of absolute amount of capital, but to your point, where the capital is being used is really relevant. And then distribution is an interesting question. I think you're obviously seeing partnerships established between companies. The most obvious one is the Microsoft OpenAI partnership, where OpenAI has kind of helped Microsoft come back to the forefront, given that they were far behind in the search race. I do think this investment in Anthropic may be similar. I think Amazon is obviously kind of hitching its wagon to Anthropic, believing that they will be one, if not the eventual winner. And I do think the benefit for the LLM companies is potentially getting distribution with some of these partners. So it's really an added plus. And so it's a multifaceted race. I think there's a lot of ways to look at this. I don't think there's going to be a huge number of winners. I think there will be a few.
And speaking of partnerships, I wanted to ask Nnamdi, with Amazon building its own AGI team and models in-house, can this partnership survive long-term? Or are we watching a repeat of the Microsoft OpenAI tensions play out in slow motion?
It almost seems to me that companies like Microsoft and Amazon and Google are throwing the kitchen sink at this problem. It's almost like we're going to build, we're going to work internally, we're going to try to compete, but we're also going to hedge our bets in a sense and make these large investments in companies where they may either enable us to win via partnership or, as to your point, via distribution partnerships, or, theoretically, there may be eventual acquisitions as well. You obviously recently saw Meta's very large investment in Scale AI, which they structured in a creative way to avoid, regulatory scrutiny. But effectively, they're acquiring a business and bringing in their amazing talent because they were behind. And so I think it will be really interesting to see when it's all said and done what happens in terms of internal versus external, or really all of the above. But I do feel that at the end of the day, some of the strategies are throw the kitchen sink at this problem and let's see what sticks effectively. Let's see what works, and we'll kind of double down on that.
To close it out with Nnamdi, I asked him, Project Rainier's 2.2 gigawatt footprint dwarfs anything Google or Microsoft are building. Are hyperscale data centers now the true battleground for AI dominance?
I do think the data center battle is a super interesting one. I do think Amazon clearly has advantages, given their experience with Amazon Web Services, given their existing footprint. I do think that's another kind of like forum for this race, so to speak, and for this battle. But I think it's interesting. I think it'd be interesting to kind of to see how it all pans out. I think the good news on the data center side is, one, there potentially will be job creation there. There will potentially be increased innovation in terms of the tools being used, and at the end of the day, also adoption of clean energy sources may be a kind of an added benefit.
Thank you to Nnamdi for being on the show today. All right, that is it for today here at Venture Daily. Thank you so much for spending today with us. Thank you for spending this week with us. This is week number 8 we just closed out here at Venture Daily. And thank you to Content Stack for allowing us to film here every single day in Austin, Texas at the Content Stack Experience Center. If you like today's show, whether you're on YouTube, Spotify, Apple Podcast, or X, throw us a like, a comment, and a review. Throw us a 5-star rating if you think we earned it. And as always, I'll see you Monday morning here at Venture Daily.